Hi, I'm Peter Hodson, CEO of 5iResearch.ca. Today we're going to talk about what to do when your stock goes down. Of course, the market is a fluctuating entity. Sometimes you will have a stock that goes down. Sometimes you'll get bad news, and sometimes you won't. Sometimes the stock will go down just because the rest of the market is down, or because, lo and behold, somebody wants to sell a lot of shares. So you're sitting with a stock that's down 5, 6, 7, 10%. What do? The first thing you want to do is take a look at the market backdrop. What is the overall market doing? If all stocks are down, it's likely your stock's going to be down as well. It's nothing to worry about. Then you want to look at the fundamentals of the company. Has there been any bad news? Has there been any negative events? Have they missed earnings? Have they added debt? If nothing is going on from a corporate point of view, you just have to examine your thesis. Why do you own that stock? Do you own it for the long term? Do you own it because you believe growth is going to be there over the next 5 years, or are you owning it for a short-term trade? If it's a short-term trade, then surely you don't want to stick around for a decline. But if you're an investor, which we think you should be, then nothing to worry about if there's no news. What if there is bad news, though? This is where it gets a little bit trickier. If you've got some negative news, your decision now is to decide, is that news going to change my investment thesis on this company? Is this an event or a piece of news that's going to impact my profitability of this company down the road? You also have to look at your weighting in the portfolio. If you've got a company that's having some negative events occur and you own a 5 or 6 or a 7% position, your portfolio is now exposed to a company that may be in decline. This is the toughest decision, but you have to examine the long-term trends. You have to examine the competition, how the company has performed in the past, how it's performed during recessions. What is your risk if things start to deteriorate? What's your percentage weighting of the portfolio? Generally, we wouldn't be too concerned unless you get 2 or 3 quarters in a row of declining results. Then you may have a problem. We don't think you should sell with 1 quarter of bad results. We certainly don't think you should sell because a company missed expectations 1 quarter. A quarter is 90 days. If you're a long-term investor investing for 5 or 10 years, 90 days should mean nothing. Look at the growth, though. If a company misses earnings expectations and is reporting negative earnings or negative growth or slowing growth, then that's far more impactful, and you perhaps should be worried about that more than a company that only grew at 20% instead of what was expected, 22%. That's still pretty good in our view. But in a portfolio approach, you're going to have some stocks that go down. It's just the way it goes. If your portfolio is balanced, you'll be okay. And don't panic at the first sign of bad news. Just look at the long-term trends and the long-term fundamentals. Remember why you bought that stock and ask yourself, would I buy it today at this price? If the answer is yes, don't worry about it. We have 17,000 of these investment questions answered on our website at 5iResearch.ca. Thanks for watching.